Welcome back. You're tuned into Editors Roundtable here on CNBC-TV18. And as promised, let's get chatting with Pankaj Tibrewal, who joins us on the show. Hi, Pankaj. Good to speak to you as always. Before we went into the break, we were talking about a potential heat wave, maybe lack of monsoons as well. But you must be under fire, right? Managing $3-4 billion odd, and these markets have been so volatile. Do you think that there are some themes that you would be looking at if there is a deficit in power, if there's going to be, a drier than expected monsoon? Will that present a couple of opportunities? We were highlighting stocks like JSW Steel, IEX, and the likes.
So yes, Nigel, I think what we have been saying over the last couple of years is that investment cycle this time around looks for real. And let me share you a few data points which probably could be very interesting. If you look at the entire order book, book-to-bill ratio of most of the infra and capital good companies, they're at almost all-time highs. And we are seeing push from government, we are seeing push from state governments. PLI, it's doing its bit, and private sector has started to show signs of capex kickoff. Also, we analyzed 136 companies on engineering and capital goods, and you'll be surprised to know that in 2022 fiscal year, 80 companies had the highest all-time revenues, and 41 companies had highest all-time profits, earnings in a year. And if you take it forward to the first 9 months, about 13 companies in engineering and cap goods had highest revenue in a year, and about 40 companies again had the highest earnings in a year. So I think clearly this time the momentum looks to be great on the investment cycle. And also a very good piece you have spoken on the power sector. I think the demand is increasing between 7 to 10%. And supply has not kept pace with it, especially the thermal power side. And I think at some point of time, it will reflect on the power pricing. Already in month of Feb, you are seeing average daily pricing about 8 to 9 rupees, which has not happened in the past. And the summer is yet to come. So I think over the next couple of years, we could be looking at a scenario where there could be power cuts, again, seasonally though, because solar and wind have their own limitations. And you need incremental thermal power plants. And next 3-4 years, you will not see any new supply coming in. So power sector could be an interesting overall theme. And overall investment cycle still looks to be strong. And that remains one of our top investment ideas overall from a portfolio perspective.
Right. Pankaj, as an investor, as a fund house, would you look at the sort of investments in the Adani Group, not because of what GQG has done, but the fact that that just gives me a prompt for this question, which is the fact that stocks fell quite a bit, and they see value. Right? They're a large equity global equity fund. Are you guys doing the same? Will you guys do the same with the group after the fall that we've seen?
Prashant, you would appreciate that we don't comment on individual companies or groups. And I would keep it at that because in the past also we have spoken about themes, sectors, but we will refrain from commenting on any group or any company.
Sure. Pankaj, Nimesh, you've been a little cautious on the market for the last 2 quarters. After the numbers that we've seen in Q3 and the stocks have corrected, do you see now there is an opportunity to nibble into the broader markets, especially in the mid cap and small cap?
Nimish, I still believe that at least 6 to 8 months more of consolidation and time correction is there. But I'll have my view that this is a year of deployment. And I think this is a year of moderate return expectations. And the reason I'm saying are because of 3 data points. Look at the Q3 numbers. On the headline NSE 500, you saw 6% earnings growth, and entirely it was led by BFSI. The non-BFSI segment, which is 415 companies, again had an 11% decline in profits. And the same exactly holds true in the first 9 months, where the headline basis profits grew by 7%, led by BFSI, but the non-banking and financial services actually saw double-digit decline in profits. So I think broader market is more about, rest of non-BFSI segment, more manufacturing services and so on and so forth. And that's where the concern is. I think 2 more quarters where earnings downgrade cycle will be digested in. But let's appreciate the fact that 18 months have gone by without any return in the markets. Virtually the markets are flat and portfolios are down by 10 to 20%. And let's appreciate another fact that if you adjust for the earnings growth and multiple contraction, markets are actually corrected by 35%. So incrementally, I think it will be not right to be very negative on markets. I think selectively there will be opportunities coming in over the next 2 quarters. And I still believe that this year will be a year of deployment where the benefits would be reaped in 24 and 25. Selectively start looking out for opportunities over the next 1 or 2 quarters where whenever there's earnings disappointed, franchises are good, and companies have a strong medium-term thesis from a growth perspective, I think you'll not be disappointed from a medium-term perspective.
You said, Pankaj, we have 2 more quarters of earnings downgrades ahead of us. Which are the sectors where you see maximum earnings downgrades from here on?
So I think consumption still is soft. I think, and still the expectation by the street is much higher. And also for the broader market, if you look at the expectation on earnings growth is still on the higher side, we believe. And there could be sectors from a consumption, discretionary, maybe at some point of time, autos. Probably right now, autos are doing well. But if discretionary is seeing such sharp slowdown, it can see a spillover on auto side as well. And probably metals and oil and gas is hard to call by. But I think the earnings upgrade cycle is something which we are not looking there as well. So I think Nifty earnings, if you look at 960, 970, the street is expecting. We believe there could be some more downside before we settle in out from an earnings downgrade cycle perspective.
Pankaj, thank you very much for joining in. Pleasure speaking with you. Have a wonderful weekend. With that, it's a wrap on this edition of Editors Roundtable. From the entire team, thank you for watching.